Tradesdaddy, market moves, pressure bills, still steady. They talk down, we rise up, eyes on gold, now vultures. Now vultures.
Okay, so today let's talk about time frames. So we have talked about the anatomy of candlesticks and the nature of candlesticks, meaning how they behave. So now we need to understand when and how are they actually printed, because as mentioned, they have a close and an open. So with that being said, we need to know about how how they move or their period exactly. So if you open any chart, you would realize that you have the ability to check different time frames. And the type of time frames that we have time frames that starts from seconds, minutes, hours, um, days, weeks, and months. So meaning that you can have candlesticks that are printed for every single time frame. So yeah, that's basically it. So with what is mentioned, I it indicates that there is a candlestick that is printed on every time frame, which also determines the type of trader that you are. So I will explain that in a few, but we will get the hang of time frames as we have all the building blocks. But for now, the only thing that you need to know is that if you go on every time frame, you will have a candlestick that represents every second or every minute or every hour or every 5 minutes or every um daily or a daily candle, you see. But I think for now I should explain the different type of traders explain after explaining that concept of time frames, right? So the different types of traders that we currently have, we have four major type of traders. There are others that I won't really get into details with, but the different types of traders that are the most common, we have scalpers. So scalpers are the ones that analyze from daily, 4 hour, and 1 hour time frames, and then they enter trades on minutes. So with that being said, they hold trades for seconds, 2 minutes. Sometimes it can even be hours. And what we like about scalping, scalping allows people with small capital to enter trades, because if you enter on higher time frames like 1 hour or 4 hour, let's say you are trading gold, you are going to be at a disadvantage, because with gold, um, with gold on higher time frames, it moves a lot. So the more it moves, the more money you need, or the more money you make, but the more money you can lose as well. And then we have the day trading. So day trading is one where you buy your whole positions for hours to days, and then you have swing traders, you're holding position for days to weeks, and then you have your position trading, which is the one that you hold positions for weeks to even months. That's institutional trading. So without further ado, let's get into the analysis. We analysis it's mixed with the trade that we took today. So as you can see on daily time frame, that it's still, the US dollar is still maintaining that bullish movement going up. It hasn't given anything indication that it's going to the opposite direction. So currently we are facing a smaller Nyana consolidation, but with that, it still correlates very well with gold. So we will just go to a 4-hour time frame on the US index and realize that it has been consolidating. So we have that high marked out, and the market has been consolidating today, meaning that it might indicate that there wasn't much movement on gold as well. So yeah, this is where we can see that consolidation that moves right there, making it hard for us to have a clear direction. But with this next bullish movement, it might indicate that gold might start dropping, right? So let's go to gold. And with gold, there hasn't been much changes as compared to yesterday. As you can see that it is still, after that move to the upside, it started consolidating, right? So we look at it from a 4-hour time frame, a daily time frame. Daily time frame, it still holds the structure from yesterday. And now, if you go to that 1-hour time frame, we see that it's trying to push a little bit down. So the market in this case has been bullish since Monday, but now we're experiencing a little bit of a retracement. So we're expecting it to either touch the level before it goes up, and then it might go down again. So for now, we will look for those buy setups. Yeah, and let's go to Nasdaq. Nasdaq, it was nice, and I took sells because it traded next to the highs. So it traded next to a key level, which pushes the market to sell. So when we go to our 5-minute time frame, we will realize that we took two positions. So the two positions, it was because of the previous 1-hour high, the 1-hour high that never got violated. So that's where we actually took our trades and placed our stop loss at our risk above the recent high. So the first one didn't go to take profit, so it went back to break even, because immediately when we got into profits, we took it to break even and then entered on the second entry. So basically that's everything for today. We didn't have much analysis going on, or I didn't record the analysis process, but this is what I have.
Now I just